You're listening to AI Prism from Seoul Economic Daily.
If you hold Korean stocks or an ETF tracking Korea, yesterday's 8.95% crash and today's snapback are connected by one mechanic, not by any change in the economy. Goldman Sachs says leverage-ETFs, not weak fundamentals, forced that plunge. Foreign investors just pulled a record $30.72 billion out of Korean stocks and bonds in June alone. And bank deposit rates are climbing, giving your cash a real alternative to sitting in equities. Here's what actually moved the market, and what didn't. It's Wednesday, July 15th. Let's look at what this means for retail investors in Korea. Korea's Kospi plunged 8.95% Monday, triggering a circuit breaker, before rebounding 0.73% the next day to close at 6,856.83. Goldman Sachs traced most of the panic selling to leverage ETFs unwinding positions mechanically, not to any shift in company fundamentals. At the same time, foreign investors have been pulling money out of Korean stocks for 6 straight months, even as bank deposit rates start climbing. Here's what the numbers show. Foreign investors net sold 1.67 trillion won, $1.12 billion, and institutions net sold 2.23 trillion won, or $1.50 billion, during Monday's crash, with 45.4% of that selling coming from program trades, according to Goldman Sachs. The Kospi rebounded 0.73% to close at 6,856.83, as foreign and institutional investors bought back 969.5 billion won, or $649 million, and 3.22 trillion won, or $2.15 billion. Korea's central bank reported a record $30.72 billion in foreign net outflows from local stocks and bonds in June, extending a 6-month streak of stock fund withdrawals. Savings banks raised their average 12-month deposit rate from 3.24% in April to 3.93% by July 13th, a 0.69 percentage point jump in 3 months. A 1-point rise in the Kospi's monthly return can slow deposit growth by up to 93 billion won, or $62 million, over the following 3 months, per a TOS Insight report. JP Morgan surveyed 50 Asian investors in Singapore who broadly expect memory chip fundamentals to hold steady over the next 1 to 2 years. So what does this mean for retail investors in Korea? Earlier, we said yesterday's crash was mechanical, not fundamental. That distinction matters if you're deciding how to read the swings in your own portfolio. The bigger risk isn't the daily volatility itself. It's that record foreign outflows are shrinking the market's cushion against future swings. With savings bank deposit rates now above 3.9%, it's worth watching how that shifts the competition for your cash, even before you decide to act. That's today's AI Prism, Retail Investors. This episode was produced with AI assistance based on Seoul Economic Daily reporting and reviewed by a human editor. AI Prism is a Won IFRA award-winning series. We'll be back tomorrow.
You've been listening to AI Prism from Seoul Economic Daily.